Well, China currently has more than $19 trillion in bank deposits. That's one of the largest totals. And having deposit insurance is a major step towards interest rate deregulation. CCTV's Jian explains.
The system will require all financial institutions in the country to pay insurance premiums into a fund which will reimburse savers if their banks go bankrupt. The reimbursement cap will be 500,000 yuan, around $81,000, and that will cover around 99.6% of all accounts in China's banking system, according to the People's Bank of China. For deposits exceeding that level, compensation will be set according to the amount available from the bank's liquidated assets.
The new scheme will primarily benefit the working class. It is not easy for them to accumulate savings, and the insurance will protect them.
We retired workers do not have much savings. 500,000 yuan is enough to cover it. If my savings were more than that, I would deposit them in different banks, no more than 500,000 yuan in each, so everything can be covered.
I don't trust financial products very much. The insurance will give us confidence. I keep my deposit in banks. Usually I go to the big state-run banks instead of small or private banks.
China's big banks have advantages over smaller banks in soliciting deposits because depositors believe they have an implicit state guarantee. The deposit insurance will release government from the need to directly manage bank interest rates and is therefore a precondition for complete interest rate liberalization. Liu Dongliang, senior analyst at China Merchants Bank, says deposit insurance will have a larger impact on smaller banks, which are more likely to entice savers using higher deposit rates.
There will be a difference between banks as to the amount of risk they are willing to accept. Theoretically, this difference could lead to deposit transfers, but I think there won't be too much of that. In the long run, deposit insurance sets higher standards for commercial banks' operation and risk pricing. Only banks that deal well with those issues can develop better after interest rate liberalization.
The debate over when to start deposit insurance in China has been going on for 20 years. The start of the system now marks what could be the last step before the complete deregulation of interest rates. The only remaining interest rate control is now the deposit rate floating cap, set at 30% above the benchmark rate. Some analysts are saying even that cap will be fully removed this year. Zhang, ICS for CCTV, Shanghai.